Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Some interesting news on Apple shares going on with this recent market correction. Their stock really took a tumble here and is on a little bit of a roller coaster. Tracey, Ryniec, Dave Bartosiak here with me once again to talk more about this. Tracey, let's start with you in the fundamental picture. Now, just for some background, Apple generates about a quarter of its sales in China, okay?
That's right.
And investors reportedly concerned over the iPhone sales going forward. Not necessarily for 2015, but 2016 and beyond.
Right.
With everything going on in China, they're afraid those sales are going to start contracting over there. You've been following the story as well as Dave and I. Fundamentally, as far as that picture goes, what has this stock tumble done to that picture?
Well, I mean, it's made it a lot cheaper. You know, Apple's never been an expensive stock fundamentally. And so now with this recent sell-off, I mean, it's trading not, dirt cheap, but it's pretty cheap. You got a forward PE of 11. That's cheap by any means, but certainly one that's generating this kind of cash flow, it's really cheap. It's a Zacks ranked number 3 hold right now, but that's not that unusual for these big caps. But it's got the style score of an A for all 3 for value, momentum, and for growth.
Wow.
Because it's got big earnings growth expected this year of over 40% is what the analysts are looking for. But now, as you referenced, it's next year, which is looking at single digits right now. But I think that's because the analysts, they're being a little conservative on how they view next year, and given everything that's going on in China, with it being a decent part of the business now, they're just being conservative. Now, while this is going on, there was this email that the CEO, Tim Cook, sent to Jim Cramer of CNBC talking about how sales are strong. I put up a portion of what he said up here, and I underlined some of the key words here. Basically, it wasn't obviously just to Jim, it was to the greater investing world, saying he looks at the Chinese numbers every day, business is still good, they're still tracking how they expected to track going into, July and August, so don't panic, everyone. But again, you said you're concerned about next year. The estimates are kind of showing that the analysts don't really know about next year. But I do have to say, the iPhone came out while the Great Recession was going on, and everyone was concerned about iPhone sales here in the United States. Like, who's going to buy one of these expensive things when all of this is going on? And it didn't hurt their sales. So it's still kind of an upper middle class, rich person's item, especially in China. And even if their economy contracts a bit or weakens, there's still going to be a big segment of their population that still wants it.
So basically, do you agree that the iPhones are critical to Apple's bottom line here going forward?
Sure. I mean, it's like 70% of all their profit is from the iPhone. But the Apple Watch came out. I know it's been kind of disappointing, but recently Best Buy just had their earnings report, and they carry it in their stores. They wouldn't say how many of them they're selling. I think they have an agreement with Apple on that. But they carried it in only 100 stores, and it's selling so well that they're expanding it into all 1,000 of their stores by the end of September, like in anticipation of the upcoming holiday season. And they're going to feature it more prominently, like in their displays and all of that, which tells me that, the Apple Watch isn't quite as dead as what everybody thinks.
Dave, let's bring you in here. Earlier, I said to you, is this considered a momentum stock? And he said, well, it was. but at one point during the market roller coaster that I referenced, I think it was Friday the 21st of August, Apple shares were down almost 20% from their 52-week high. That's what's called typically correction territory. And then it did bounce back in subsequent trading, the next trading week. First of all, where do those shares sit today? And then second of all, right before we came in here to record this, there was a headline that crossed the wire that the death cross appeared on Apple's chart. It's not on your chart, but it appeared on the latest one. What do you make of all this?
Run, hide, seek protection. No, Death Cross is a Kurt Russell movie from the late 80s, isn't it?
Well, it's not a good thing, whatever it is, right? When it comes to stocks.
Right. I mean, it's like a function of the mathematics in tracking stocks, right? So it's when the 50-day moving average crosses under the 200-day moving average. That's the death cross, and everybody freaks out, right? It happens more often then people lead on. Okay.
Well, in this case, first time in 3 years.
Right. And basically, all you're saying is that the intermediate tracking of this stock is getting slower than the longer term tracking of this stock. So it's starting to roll over a little bit is all you're saying, basically, right? So traders used a variety of different moving averages in order to try to come up with, these predictive analytics kind of thing, right? So when you're trading in the shorter term, some people use a 5-day, a 12-day, and a 20-day, right? And they do the same thing with, okay, if the 12 goes under the 20, then we got to sell, and what's going on.
Yeah.
But if a stock is going to roll over, then yeah, you're going to have the 50-day come underneath the 200-day. It's going to happen when a stock rolls over.
Okay.
But the problem is that death cross is going to happen more than that stock is going to go ahead and roll over. Okay, so that's the death cross part.
Still doesn't sound like a good thing to me.
It's not what it's telling you is that Apple shares today are lower than they have been on average over the last 50 days and the last 200 days. Okay. I didn't need a moving average to tell me that. All I had to do was look at the chart. Okay. So with Apple shares coming down from 135 or something at the top.
Yep.
I think today we're at 107. Last I checked before we came into the studio. It's amazing how that 100 level psychologically gets defended, right? When that was 700 before the 7-to-1 stock split, it wasn't defended in the same way. So part of it, props to Apple for the 7-for-1 stock split, because now you instantly think of it as a stock that should be above $100. And anytime it dips below, people come rushing in to buy it. Okay. Now, on it being a momentum stock, the funny part is it will be, because it'll move higher, trend higher for an extended period of time, which we've seen in the chart over and over again over the last few years. And then all of a sudden there'll be some controversy, and then we'll sell off or get locked in a consolidation for a little bit. So it's almost like when the retail guy finally realizes that Apple's a momentum stock, then they buy in and they hit the top and it starts to sell off. And then when the thing comes down, the retail doesn't want to touch it, and then it becomes a momentum stock again. So it's just like this. So that's why I think you see some of the other guys like Kramer and such, where he's like, don't trade Apple, just buy it and hold it and forget about it. And I think that's kind of where we're at here. Apple at 107, are you going to buy this here and lose money? You have to do something on purpose to lose money, I think, if you buy Apple at 107 and hold it for the next 6 months.
So is this kind of a situation here, a chart watcher's dream, when this kind of stuff happens to a stock? I mean, those who are really into the charts.
I have dark dreams. And those kind of charts, the death cross doesn't even pop up in my thing. I think if you look at the retracement, that we've seen take the low from earlier in the year, go all the way to the highs. I drew the fib levels here on the chart. So we're approaching, I think, basically the 50%, which is the middle of this move. We bounced off of that. Now we're right up at that 61.8 retracement level. So, which coincides with that peak that we saw about a year and a half ago. So, that's the kind of stuff that gets me all fired up in the morning. Is the retracements back to support levels and things like that. Not so much the death crosses and stuff. That's amateur. That's amateur hour, man.
It's a weird image. Dave fired up in the morning. I don't know.
Doing push-ups, looking at charts.
Do either of you own this?
No,
I do not.
All right. Well, thanks both for the assessments and opinions, and we know that you'll keep an eye on it. We'll update the audience as warranted. That's the latest on Apple stock. Where's it going to go from here? Time will tell. With Dave and Tracey, I'm Terry Ruffalo.